Have you ever heard of bonds? If you've not, it's the right time to listen to this interview or even watch it. I've got the story of Abhijit Roy and Samir Prathihar, who are the founders of GoldenPi, which is a platform for fixed income securities and how it can grow your income. Abhijit, Samir, welcome to the upstreamlife.com. How are you guys? Good?
Yeah.
Thanks for having us on the show.
You know, I'm fascinated with your company simply because I always got to invest in equities in the past. I always wanted to invest in fixed income securities, bonds, and the platform allows that. So you want to quickly tell me what GoldenPi does, and then let's get into the brass tacks of the product fully today, okay? Let's start with what GoldenPi is. What is it?
Cool. I think that's one of my favorite questions, right? So the problem that we are trying to solve is to provide peace of mind to investors and safety of capital for their investments. See, one of the de facto things that people do when they start earning is, right, they would want to save, right? And saving isn't just about dumping money into a bank account, right? You got to invest so that it gives you returns, right? Now, it can be into fixed income, which is a steady growth of your capital with very little exposure to risk. It can also be, taking positions in the equity market where you have more risk, ups and downs, right? But the way we look at it is, every portfolio should have certain portion of fixed income. And that's the peace of mind for him or her. He or she really doesn't need to get a heartburn with the value going up or down because it's always fixed, right? So I think that's a kind of comfort that we are trying to bring to the Indian investors, right? With a bevy of fixed income products like bonds and debentures.
It's as little as rupees 10,000. We'll get into the pricing in a bit.
That's right.
Bonds itself is a very interesting subject. I'll get into that also. How did you guys meet, Samir? You're the CTO here.
Yeah.
And you take care of the business.
Yeah.
Right.
Did you guys know each other from childhood? How did that meeting happen of minds? Meeting of minds is very important for entrepreneurs. Did that comfort factor
16 years,
appear
I guess.
because you guys were together?
Yeah, I think it's
16 years.
more than more than 16 years.
Yeah.
So
Schoolmates?
2005
College.
We met in college.
Which college is this?
A common friend. So he was in JU, I was in IIT, and we met, once through a common friend. But then we actually got to know each other as colleagues in our second job, right?
Yeah.
So I had joined a company called Ixia Technologies, and a couple of months later, Samir also came in, right? And we were put into the same project, and it was the same space where we used to sit, and the same product we were working on.
Do you remember the project, Samir?
Yeah, I still remember. Because we used to slog 14 hours a day.
What is that product? 14 hours? Or do people make young people work hard? Is that how it was?
No, it was completely new and like we were building something really, cutting edge things at that point of time. It was into the networking space and basically, we are developing test infrastructure for the routers and switches to make it scalable before pre-deploy. Again, it's a little bit of different thing what we are doing now.
I understand, yeah.
But, that was really like we were into that job and, it was a high targets. We have to make it working.
Yeah.
So
I think those high targets are what make entrepreneurs work, right? I mean, that gives you the rigor to build a company.
Yeah.
So that's exactly what I want to know from both of you. How did you build that rigor to starting up GoldenPi? You had worked in corporate for a good 15 years.
Yeah.
And when you set this up, what was the genesis of the idea?
Yeah. So, it actually came through bits and pieces through the entire thing where we were in that time frame. So it was in the year of 2016. I was working in a fintech company here in Bangalore. Samir switched job and he joined a company which had its office in the same tech park where my office had space, right? And then, by serendipity or by stroke of luck, he took up a house that was just a couple of blocks down the lane where I was staying, right? So I think the equation was being drawn out at a larger scale by someone else.
It's interesting, right? I mean,
it's really interesting.
And,
it's really interesting.
Who mulled whom to talk about the idea? Did you speak to him and say, let's start up? Or did you just say, let's give up our corporate jobs and start this? How did that happen?
It was pretty much, together itself, right?
Yeah.
We took a stance of starting something back in 2007 of building a business. Right? It was a failed attempt for several reasons. But that was a good start actually, wherein we felt, Samir and I have always been able to converge to the same decision no matter how, different directions we have been thinking initially. And I think that's something of a chemistry which works very well amongst us. We are able to come to the same decision. So in 2016, when we started talking once again, right, both of us were having at the same time the desire to do something new. Now, like enough of corporate world, right, corporate job. Now we need to do something new, take things faster out, right? And what are the things that we can do? It was pretty much, same time, same day, both of us resigned.
Grapevine also tells me that when you started up, the product itself, when we talk about bonds, for retail investors to invest in bonds, that product did not exist at the time. I had covered bonds in way back in 2005-06, and it was only for people who had lots of money. True. And you guys told me its lot sizes were 10 lakhs plus or more at the time. Yeah. When you started up, you had 5 iterations of an idea, right?
Yeah.
Right?
True. Very true.
So I tell entrepreneurs out there that in the first 1 year, you have to figure out what you are, although your core idea remains the same. Am I correct in saying that?
That's very true.
Yeah. True.
The basic idea of what we are trying to solve for was set out on day one itself. But how we are trying to solve that underwent iterations.
Do you want to talk about some of the ideas, Samir, both of you?
Yeah, sure.
Samir, some of the ideas that you thought about in the first first 12 months, let's talk about
precisely the objective was to make this good asset class available to the retail investors. But, being new to this field, because we are primarily techies, wanted to solve this problem for this industry, for retail people. So initially we thought of, we'll be doing by exchange because that's a very convenient route to do, right? But that was a failed attempt because the bond market doesn't exist in exchange. So we did something, it didn't work. We have to again go back to the drawing board, again do another flip basically. And I think what are the second flip basically?
You had 3 flips, is it? 3-4 flips you told me.
3-4 flips.
Do you want to talk about a couple more? How do you come upon the core product?
Yeah. So
sorry, I'll
go on. Go ahead.
I'll go to the second.
We are very passionate about those failed attempts.
So the second one that we tried is we didn't consider. So this was the execution part, and the second one we didn't factor in the market lot size, which was at 10 lakhs, 50 lakhs. We thought we can build a good fixed income portfolio just by having 1 lakh. So we focused on the algorithm to build it, and then sort of demoing people and all that. But then when we tested with real data from the market, we thought, it will not work. The algorithm is fine, but doesn't have that real inventory. So it's a mismatch.
I got it. So the market didn't. So the people you went to are large bond traders, and was that the mismatch? That will that scale? Will it not scale? Was that the question?
It's about getting the right inventory.
Okay.
Because we're not. You cannot. The algorithm is fine, but you will not find the right inventory to source it and then so that the algorithm can give a particular
suggestion.
Suggestion. Right.
What is that inventory?
So essentially, an inventory is a stockpile of bonds, bond papers that somebody is wanting to sell. It can be a financial institution, right?
Yeah.
Now, like what Samir said is, we built the product interface considering small ticket size, right? 1 lakh, 50,000, right? But then the seller has to be willing to sell at those small ticket size.
Yeah.
They were doing trades minimum of 50 lakhs and multiples of that one. Literally crores, right? So that was a model that we're focusing on.
It was very interesting. So they were not convinced, saying, hey, will that participation from the retail investors happen? Or, we may not need this kind of a product. Was there some of the thought processes with them?
General people, right? People in the market, when we were discussing, a lot of people had this reservation that would this really work because the ticket size is large and, normal people will not be able to, people with retail participation will not be there, right? Because information dissipation, awareness is so low, right? And on top of that, the amount of money needed to invest is big. We went to the financial institutions and we said, would you give us at smaller ticket size? There's a lot of discussion which involved over there, right? And we showed them that how we can bring in the retail participation, which actually would, when aggregated, would be way more than what corporate does, right?
Absolutely. Some of the parts are larger than the whole.
Yeah.
For those of us young minds, I know we are a bit long in the tooth, all 3 of us, but, there are people who are younger, who are the real retail investors. they have to realize the difference between an equity and a bond. Do you want to quickly tell them why a bond is also a sort of thing that you have to invest in,
right?
Not just equity. And also, the reason I bring this question is the transition for the guys to say, okay, we'll give you securities where retail people can invest rupees 10,000 and participate in your platform, right? Can you tell them what the difference is?
Sure.
And also bring in the aspect of convincing these people. You briefly mentioned it. So who was your first champion saying, okay, we'll give you a bunch of inventory that retail investors can come in at 10,000?
Right. So let me start with that portion of the question regarding difference between equity and bonds, right? So investing in equity is basically taking up ownership of the company. Now, if I'm taking ownership of the company, I'll have to ride through the waves of high as well as low. And as we all know, the equity price can go up, can fall down, right?
Very cyclical,
so it's a very cyclical one. It's a roller coaster ride. When I invest in bonds, I'm actually loaning my money to the company, right? And expecting that the company will give me fixed returns, right? So let's say I put in 10,000 and I'll tell the company, I need 10% annually on this, right? Now the company is obligated to pay that to me because that is debt. I'm nowhere involved with whether the company is doing good or, moderately or bad, whatever be it. The company is liable to pay me that. So my risk exposure from capital in equity becomes more and in bonds becomes low. That's basically the difference.
That's the difference. I want to know who your champion was, right? You told me about why people should come from equities to bonds. That's set in motion now. I want to know who championed you.
Yeah. So in the initial days, we had quite a few, people from our circle who took the leap of faith with us and invested in bonds through us, right?
Friends and family?
Mostly from friends and family. But then if you talk about the person who actually put in the belief that we can do this stuff, right, and championed us, that was a support from Nithin Kamath that we got.
How did you meet him? Just curious.
Yeah, so we had actually written to Nithin and to his team asking for some APIs for integration, and then he invited us to come over to his office for a discussion, a chat, and we were completely elated. So we went there, we had a very intense discussion on fixed income market, and that's where the ball started rolling.
Yeah, by then you've done 3-4 iterations, the product was now set, it was for retail investors, 10,000. Now I want to come to you, Samir. I'm sure every investor loves a good technology person. While he's creating the product and you're also working with him, how important was the tech? How robust was the technology at the time? What would a lot of the investors ask you? Is it built for scale? Obviously, that's a no-brainer. What else was important to you as an entrepreneur building technology for this?
See, build for scale, I think it is, whenever you are building a platform for retail investors, especially for India, where the product goes good, it will scale up like anything, exponentially scale up. So it has to be like from day one itself, you have to factor that in. Suddenly you cannot say, okay, from 10,000 I'll go to 12,000, 20,000. It cannot scale up like that. So from day one itself, we had those considerations, and accordingly we started building it. And of course, in today's world, as you know, nothing, you have a lot of tools and techniques available, even a lot of cloud providers available, where you have to have the idea, you have to have the architecture, and you gather bits and pieces, and in a short span of time, of course, you have to have that experience of building it, and you can make it live. You don't need to really build it everything from scratch. That's the power of today's open source technologies.
Absolutely.
And there's a lot of people are contributing to that, and everyone is benefiting from that. And there is a turnaround time to the market has come down drastically.
Absolutely. Samir made a wonderful point that it has to be built for user first. You're also solving it for a industry that never had access to such technology. So you want to qualify what he meant further?
Yeah, sure. He was bang on target with respect to how we are being a tech first company trying to solve a problem in the financial market, right? And what has actually happened is the bond market has been a hundreds of years old market.
Yeah, I heard it's older than equity.
It's older than equity. The earliest traces of the bond market go back to Mesopotamia, actually, where there was a seal that still can be found in one of the museums in US. Right? So coming back to our context, essentially what has happened is the bond market has been an institutional game, which means that investors have talked over the phone calls to find out what bonds are there, negotiate on the prices, get the delivery done, right? And that's how it has been rolling. So it's a massive market purely driven on operations. Now, that equation changed the moment we wanted to make it available for retail. Why? Because if you look at the operational part, in a day, as an institution, probably you do 5 trades, each ranging, say, from 50 to 100 crores, right? Cool, that's 5 trades, right? Now think about retail, you would probably be doing 1,000, 10,000, who knows, even lakhs of transactions of small ticket size in a day. There, the whole way of scaling this up has to happen on the basis of a technology, right? It cannot be a voice-driven market, right? So that's the element which was missing, which we brought in, and we definitely drew inspiration from the e-commerce market which was there.
Yeah.
Right?
Okay. How many bonds are on your portfolio today? I mean, everybody, when I go to a mutual fund, they say a portfolio kind of approach. You're not a mutual fund. I want you to clarify that. You don't host mutual fund products. You host only debt securities, fixed income securities, bonds, right? Do you even do exchange traded funds? You do exchange fund ETFs here?
Not yet.
Not yet.
Sure.
Okay.
Yeah.
Do you want to tell us what is a portfolio at this point of time?
Yeah. So, we have around 500 to 600 bonds, right? Which is they're available to us through our various partners, financial institutions. And on a daily basis, we do a display of around 100 to 150 A to AAA rated categories bonds only. And that totals around 4,000 crores on a daily basis.
Yeah, this is like your, this AAA rating it's extremely important for people to understand. If they have to actually go up and search and understand why AAA is important. You want to care to explain why AAA is important?
Yeah, sure. I think that's a very important point for investors, and to think beyond this AAA, AA as well, which I keep on telling always, right? So one quick way to understand the risk in a bond, right, is to look at the credit rating. And within the credit rating framework, AAA stands to be very safe, then AA, then A. And then you go down to BBB, BBB, C, then D is default, right? On GoldenPi, we show only AAA to A rated bonds, right? Now, why I tell investors to look beyond credit rating is because that is just one parameter to be observed.
Right.
Beyond that, investors should look at the quality of the company also.
And the investor is me.
Yeah.
So when I come in, I look at say it can be a government bond also, or it's only corporate bonds on your platform at this point of time?
So it's corporate bonds primarily, but we are adding government bonds in a very short time.
Quick primer. A corporate bond is nothing but something that a company has issued, and it's issued for a fixed tenure at a fixed interest rate.
Right.
And that's what I buy into. And the upside is when I lock in for 5 years and I come out, I get that interest rate, right? That's the model. Or is it different? You want to explain that?
Some part of it is right, Vishal. Some part needs rectification.
Please. And I'm sure that everyone else wants that rectification. So tell us.
And I'll tell you, the points that you mentioned correctly, right? That's great. The points which were not right, we find that across 99% of their first-time investors.
Absolutely. Right? I have not invested. I want to invest in bonds. So let me know. What is it?
Right. So, like you rightly mentioned, a bond is basically a piece of instrument which signifies that I, as an investor, have given a loan to a company, and the company is giving me X% returns, X% interest on my deposit amount, right, for say 5 years, 6 years, whatever be it. Now, once I've purchased that bond, there is no lock-in on bonds. I can always go out and sell it technically in the secondary market whenever I need. Number one. Number two is, I don't have to wait till 5 years to get my returns.
I don't have to wait for the maturity.
No.
I can redeem it immediately.
I can go ahead and sell it in the secondary market. And every year the company is actually supposed to pay me back interest on the amount that I have given them, right? So it's a continuous cash flow till it matures.
It's interesting. So what are the kind of returns we're talking about? I know a lot of people say that it's better than an FD and all that comes in. Do you want to give us some math on why it's better than an FD? It's also safer than an equity in many ways.
Yeah.
Do you want to tell us that?
Yeah. So let's take up the FD question first, right? Right now the FD rates in the country are within 5.5 to 6-ish levels, right? And that's like very good.
Yeah.
That's like the highest one that I'm speaking of. When you look at government bonds, right? A 10-year government bond issued by the central government itself will be giving you 7.3%, right? And when you look at AAA rated bonds, they would start at 7.8%, would go up to as high as 8.5%, right? Now let's take that, right? 8.5% versus a 5.5% FD. How much is the difference? 3% straight away. The popular duration of an FD is 4 years, 3 to 4 years, right? Let's say I put in a money in a bond for 4 years versus in an FD for 4 years. The differential interest that I'm going to get is 4 into 3, 12% on my money, right? That's a significant amount of difference that comes in. When I look at AA rated bonds, I will expect something between 9 to 10.5%.
Yeah.
And when I look at A rated bonds, it'll be more than that. Around 11ish percentage is where it'll hover.
It's interesting. So the math I make of it is, one is you can redeem it when you say sell it whenever you want.
Yeah.
Just get onto the website. I want to sell it after 6 months. I can. You still get that upside. That's what you're saying, right?
I'll put in, some more details over here. So a bond does not come with any lock-in period for me. If I want to sell it, I can always go to the secondary market and I can sell it. But the point over here is the liquidity in the bond market is slightly on the lower side. Reason being, you have to get a buyer who would be willing to buy it, and you also have to get it at a price that you want to sell at, right?
And there are buyers on your platform.
There are buyers on the platform, financial institutions. We typically try and arrange financial institutions to buy off from the ones who are trying to sell it, right?
Which is very interesting for me. This is something completely new. I've done mutual funds, I've done stock, but this is funny. I mean, you arrange an institution to buy the bond that I've invested in.
Yeah.
It's interesting. So there'll be a consortium of people who invest in a bond at rupees 10,000, and then you arrange an institution to buy it out.
That's right.
It's phenomenal. So why did Nithin invest in this idea? Because they were thinking to do this and they hadn't done it, or what was the reason? When we talk about Nithin, we're talking about Zerodha as Nithin Kamath. Everybody likes that cell, so I'm just bringing it.
So, Nithin is an internal explorer of the financial markets, right? And he knows the entire landscape, the way the market is moving with respect to the various asset classes very well, right? And we went to him, we explained the business model. More than what we were building, the motto that we had, right, of making fixed income asset class, alternate fixed income asset class like bonds, available to individual investors is something, a cause which is very dear to his heart, right? And he wants good quality assets to become available to investors, right? And, I think that's something that he felt as something worthwhile. And then, he put in all his support behind GoldenPi.
For me, this is great. He puts in money, and now you've scaled. How many members are you as a team? Most of them in tech?
Tech, it will be around 20, 25.
How big is the team?
So we are around 65 people now.
65 people. Yeah. Okay, now coming to the tech part of it. All this while we spoke business, bonds and all that. You guys said you're techies, but now you're like talking bonds like expert. How did you as a techie learn these things? Did you have to learn from books, videos out there, or did you just say that, look, I'm just going to code what you want? He gives you the requirement, and did you code?
No, not really. At the end of the day, we have to understand, because I will still go back to my initial point. Even before you write code, you need to understand what you are writing for, right? You need to solve it, and pen and paper first.
It's like you need to have a headline in your head,
right? Then you start writing. So of course, to come back to your point, of course you have to have an understanding, because otherwise you cannot build a system out of it, right? And as you was explaining, this bond market, the OTC market, it's really complicated if you go into deeper. There are so many variances. He explained in a very simplified way.
Yes, absolutely.
You have to put it in a very layman's way, but when you go into deeper, there are so many variances, there are so many ifs and buts, and there are a lot of rules changing. So it's a basically complex rule-based system that we have to create. And that's how the technology comes into picture, where you can scale up that complex rule-based system, and without that you need to really deploy a lot of manpower, and then the economy of scale doesn't come into picture when you are catering to thousands of retail investors.
It's complex rule-based because not just investors coming and buying the bonds, but it's also because of
the nature of the variances for different bonds to bonds, the market. There are a lot of market nuances that we understood while going through the journey. I mean, that's right. I mean, because we are not like a manufacturer of the bonds, right? We are, getting it. I mean, as you said, like there are bond institutions we are partnered with. So if we consider the whole ecosystem, it's really like there are a lot of market nuances that makes it complex, and you have to put all those rules into the system so that it takes care of all the aspects, and then it satisfies everyone's requirement, starting from a supplier to the end consumer, and that all bits and pieces flows through GoldenPi system.
Okay, fantastic. So the APIs are open for your bond providers or the inventory providers, people who give you the bonds, and there are people who invest, and there are people who also buy later on, right? That's the ecosystem you're talking about.
Yeah, the entire ecosystem, starting from the supplier to the end consumer. Now, I mean, coming to the API point, as you know, the suppliers are like institutions. They are into the business for long. They are not really into the API business, I mean, tech business.
Yes.
So we have built a platform for them. We have given an interface for them that is user-friendly, and they can just use it, put up their inventory, and rest of the thing is taken care of by the system.
Right.
If we give them API, they will get scared.
Absolutely. So you won't use the word APIs, of course. You just tell them that this is our technology, just plug in.
Just log into the platform
log in
and
do this.
We have made it simple for them so that they just need to, don't worry about the tech part, you just focus on your business.
Okay. How many people, you said 20 people in tech.
20 to 25.
You're going to be scaling up your business now, obviously.
Yeah.
Are you hiring? What kind of people are you hiring for? Why should they come work in GoldenPi as technology people?
Yeah. So, I mean, as we said, like we are hiring, of course, we are hiring. There are multiple positions. And for any, technology guy who is looking to solve a real life problem, because as he was mentioning, like this is an age-old industry where really, technology has not been penetrated. So, I mean, of course, I mean, using technology can solve many problems in today, starting from e-commerce to any service delivery or any platform that you build. But here, what I mean is, for a technology guy, you need to understand these complex market scenarios and then translate that into an equivalent product or a solution. That's where it makes it interesting, where it's important for people who loves to solve a problem. It's not really, just writing the code. That's why I'm again repeating the same thing. It's about solving a problem that helps to the end consumer. And then you are using technology as a means to
Let me surmise. It's interesting for me simply because there's a whole bunch of bond traders, or let me say bond ecosystem that nobody's built technology for. There's new users who are going to come in, and if you want to come and build technology for a company that's going to scale in that fashion and very fast, that's why they've come work for you. Am I right?
Yeah.
That's right.
That's correct, right? Go on, Abhijit. You want to say something?
And what Samir said is one of the key factors that we always look into hiring somebody, which is like having a passion for solving a problem and having a passion for solving a problem in the financial field, right?
Right.
Different people come with, having that passion, but they want to solve maybe an AI related problem, or maybe they want to solve an e-commerce problem, right? Everybody's interest doesn't lie with investments. So it takes us time to hire the right kind of people. And also I think, given that we were the first ones to start this, right? And we are on an eternal ride of doing innovations. So every day we are trying to innovate something, do something new, tweak something, right? And that innovation piece is something which, people now love. They really want to work on new problem every single day and solve it.
Got it.
Which is what we have been able to.
Golang or native, Golang, React, or Node.js. Are you looking for these technologies? What technologies are you looking for?
Node.js.
Node.js mostly. Why?
It's scale. I mean, okay, there are a number of reasons, but mostly we are using for scalability.
Is it okay? It's for scalability.
Yeah.
And
we have other tech stacks also. Node.js is one portion which is like exposing interfaces or APIs to the.
How dynamic is it?
I mean, what do you mean
A
by
lot of
solve?
people use Java also.
Yeah.
But why is this different from a Python?
We use Python.
You
That's
use
that's
Python
what I'm saying,
also.
because
So it's a stack that you're
yeah,
building.
because it's so if you consider the whole tech stack that we have built, because see, I mean, any technology has its own bits and pieces. Using a technology, you cannot solve the problem for the universe, right? So you have to understand the right fit where that, because a technology is created to solve a particular problem, you have to use it in that way only. So in our whole ecosystem, there are multiple pieces, as you mentioned. Like in some portion we have used Python because that is where it is most efficient. In some portion you use Node.js. In some portion you use a different technology.
Okay.
So that's why it's a complete tech stack that we have created, and mostly, I mean, we have tried to do a best fitting so that the entire tech stack becomes more efficient and becomes scalable.
Okay. I want to ask you, now that you built the stack, why can't you give the stack to bond traders? I'm asking. They could have also used this, right?
They are using it, but they don't need to see. Okay, when you, I mean,
I'm saying instead of B2C, a B2B kind of business model.
We have a B2B model.
You do have a B2B
also.
model also.
model.
Wow.
But I mean, just to make it very simple, to drive a car, you don't need to go inside the engine, right?
Absolutely.
You just turn it on and use it.
Unless you want to know about it.
Yeah, of course. I mean,
Yeah.
so I mean, we have made it simple. We have made it in a SaaS way. The entire complexity is behind the scene. You just use it in a very simple plug and play model, and
Brilliant.
let's scale it out together.
Brilliant.
That's the model that we are using.
If they have to work for you, they have to work for a full stack fintech company kind of sort. That's the language they understand. My question is the business model now. You've said you have B2B model, you have B2C model, which I understand at this point of time. What works for you? The B2C is the primary breadwinner or the B2B?
See, the B2C is the one which we started first, right? So it got more time to scale up. The B2B is something which we landed upon as a market requirement while we, came forward, right? So it started to scale immensely. Right now we are already live with over 5 institutions, some of the largest names like Axis, Bajaj Finance and IFL, just to name a few. The host of others who are in the pipeline. So by the end of the year, probably there will be around 12 to 14 such institutions who are actively using our SaaS product.
So it's amazing. 2 revenue streams.
Yeah,
that's right.
One, a steady revenue stream gives you enough cash to experiment while you drive your retail business as well. What's the retail participation like? You don't have to give me exact numbers. I know it's, sometimes you don't want to give out these numbers. Is it growing? Are the number of people participating in the bond market increasing in India from the retail perspective?
Yeah, I mean, there's more awareness now in the retail market regarding fixed income instruments. And given the, topsy-turvy nature of the equity market, it's all the more become something of a household theme, right? So given that more awareness is there in the market, there's definitely increased amount of participation. So month on month, we see a steady growth in the retail participation in investment in bonds.
Okay. At this point of time, they just have to come to your website and then start investing.
Yeah. Right.
Is there an app coming up?
We have a mobile compatible website.
Okay.
So, you'll get the same experience as a mobile app itself. But then we there are plans to get the other parts of the infrastructure.
Right. Okay. The most difficult aspects of entrepreneurship quickly, the last 5 years that you've been together in this journey, what was it? And did you overcome it, or did you say that, look, we're just going to ditch that side of the problem, go focus on another problem? What was something that almost shut you down, perhaps? I'm sorry being harsh here, but I need to ask that question because people should know this.
Yeah, that's a valid question. One of the reasons, prominent reasons why companies shut out is because they don't try for long, and probably they do not want to pivot their business model, right? For us, that has also been, certain things which has affected us, right? Because when we started, there was nobody in the bond market, right?
Right.
So our scaling up in the initial days has been tremendous amount of a struggle, right? So to keep the company afloat, to keep going ahead had been tremendous amount of effort which we personally had to put in, right? But once, the clock started ticking in our favor, right? Time started being in our favor. It has started scaling up at a terrific pace.
What did you get right that it started scaling at pace? Is it because you had the right team, or is it because you knew the product would now sell? What fell in place, or was it the money, or was it the combination of all these 3 things? Nithin coming in, you guys focusing on the retail side and then moving to the B2B side. Was it a combination of things that kept you guys afloat? Let me not use the word afloat, or continuously iterate and probably do very well? What came in place? Is it one thing or many things?
Yeah, it's in a business you really cannot pinpoint to one single thing.
Yeah.
It will be a combination of factors, right? So the timing was right. Nithin Kamath came in, gave us the support, right? The ecosystem turned out that keeping money in FD was becoming more apparent, like a no-brainer not to do over there, right? And people were looking for alternate assets. All these.
So what's the age group of people that experiment? What's the age group of people that experiment with you?
Yeah, so the most popular age group is 30 years and above, because they are the ones who are looking actively to put a part of the portfolio into fixed income, right? But then we have also started seeing from 24 onwards till 30 who are the people who put in the money into 10,000 worth bonds as well.
Right.
It's interesting. So people are mature, and the younger people will also come in. You're saying the 21-year-olds, 24-year-olds will come in.
They are way more informed now,
Yeah.
and they want to invest early.
Right.
I want you to, Samir, you perhaps have to say that people are interested in crypto, but the bond market is bigger than any of them. People don't realize that.
Yeah.
So what's your advice to younger people saying that look at crypto? I mean, all the tech guys are the first ones to experiment.
Yeah.
So what would you recommend? Why should they look at the bond market, or perhaps say look at crypto, look at the bond market as well? How should they experiment?
Yeah, I mean, so for a first-time investors or a millennial who just got a first job, the way I would put forward is, hey, there are multiple options for investing. And of course, I mean, when you are starting investing based on the risk appetite, you put something where you want to put something safe and stable. Of course, you experiment with crypto, experiment with equity, because there are so many
options.
things, right? So what I suggest is to build a diversified portfolio and make something that you cannot afford to lose. I cannot put my entire, let's say, I'm saving 100 rupees, I cannot put entire thing on crypto, right? So after 100 rupees, based on my risk appetite, I'll put something that I cannot afford to lose. Rest all I'll put in different baskets. So that is the way I'll put forward. So that, and if I have that mindset, this fixed income bonds naturally comes into the portfolio. I don't need to oversell it.
Yeah, and it's much more secure than crypto, I can say that. So you should experiment with your money.
Yeah.
Okay, what next? What are your plans for 18 months? Let's talk 18 months is a short enough time. By 2024 March, where do you want to be? Is a fundraise on the cards? Obviously, I'm guessing there is something on the cards because you're hiring more. But what are your thought processes? 18 months, what do you want to achieve?
Yeah, you see, what we are trying to do now is reach out at a faster pace to beyond the cities, cities and tier one, towns that are there, right? To investors so that they get access to this. One. Number two, we are definitely trying to improve on the overall, product stack and the product journey which is there. We are squarely focused on that. We have got a lot of feedback from investors which we keep on getting, and that's what we are squarely focused right now. And with respect to fundraise, I mean,
it's a parallel thing you can't avoid.
Scaling up.
You can't avoid that, right? It's a parallel thing that entrepreneurs look at all the time, I guess.
Yeah, I mean, you can run a business in a bootstrapped way, or you can continuously raise funds. Our philosophy has been, to scale up fast, and definitely, we can look at fundraise short horizon from now.
I'm compelled to ask this question because, when it comes to bond markets, it's always related to the global politics, the geopolitics of the day, with what's happening with inflation globally, the war happening. Why do bonds have such an impact globally? That's my question. And, it also decides fate of governments in many ways.
Yeah.
In fact, for people listening in, the Napoleonic Wars in the 18th century were decided by the bond markets. Did you know that?
Yeah.
It
was funded by the bonds.
Yeah, it's funded by the bonds, especially the Rothschilds.
Yeah.
It was very interesting.
Yeah.
So what are your thoughts on what's happening in the geopolitical situation globally in relation to the bond markets? Does it have a bearing on the Indian bond market?
Yeah, I think, the global ecosystem definitely has a very strong impact on what happens across the nations in their respective bonds, and also definitely on the Indian economy, right? Now, the most prominent factor which is playing truant right now is, the oil price, the war which is happening between Russia and Ukraine, the political instability, essentially, right? Now, coming to the governments, one of the ways for them to raise funds to run their, the government activities is through issuing G-Secs or the government bonds, which are termed as the sovereign papers, right? India does that, US does that, every country across the globe does that. In fact, an Indian bond market size only from the government securities is close to $1.2 trillion.
In size.
In size. In US, the market size is close to, I think, $40 trillion. In that range, 30 to 40 trillion dollars.
In the US, treasury bills also become part of this?
Yeah. So when I say, the government bond market, right, it is the government papers, then the treasury bills, right, included.
It's a huge market.
In fact, the bond market is the largest financial market of a size of close to $100 trillion. The equity market, right, global equity market is around $65 to $70 trillion.
Okay. The question is now bond prices are down, but yields are on the rise.
That's right.
What should young investors tracking this, what does that mean to them?
See, this is probably one of the right times to get bonds at a cheaper price and giving greater returns. Why? Because the bond price and the bond returns are inversely related.
Yes.
When the price falls, you get more returns because you're getting it for cheaper, while the paper says, I'm going to give you that fixed returns. So your investment is lesser, but you're getting more returns, right? So given that the yields are spiking now, right, and the price is dipping, for first-time investors is a great opportunity, to participate. And for the youngsters who have just entered the market, they have started, their job, they're getting their paychecks, right? They can participate in the bond market and very good quality bond papers at 10,000 ticket size, right? It's a great way to get a stable earning over years, fill it, shut it, forget it, and you get a huge lump sum at the end of, 5 or 10 years, get it accumulated over there.
Okay. So if they're fans of the political economy, they should actually come check out GoldenPi as well, see the variations in prices, and then come and invest with you.
Yeah.
Right? That's one good way to test your political economy skills as well. So check out GoldenPi there. My last question, books, inspirations that you had in life. It can be movies, art also. Samir, what were you inspired by?
I mean, by books?
Yeah, anything. Books, movies also. It can be parents also.
No, I mean, with respect to tech, I am basically from technology background. I love coding at the end of the day, whatever be the business and all.
That's right.
That's my passion to do something at least in a day. With respect to books, generally I like fiction books, reading all sort of fiction.
Tell me some fiction book that inspired you or something that you like, some author. Or it can be a movie also. It can be a soap. It can be a soap opera for all you know.
It's like nothing, specific. Like
okay, what interested you in technology then?
I mean,
did your father and mother put you to a tech, or did you pick it up naturally?
No, it was a natural course of action. I mean, see, I'm basically from a middle class family, right? At the end of the day, so we got a good education, go to the engineering, and land up to a job. And that all started from there. So till that, it was like a natural course. But then, I felt love in coding and I started exploring, and that's where, the passion got developed. And I'm still continuing with that.
And the advice to hold on to that passion. A lot of people give up. What am I doing? So what is your advice to stay the course?
I mean, see, let's say if you love coding, don't give up. I mean, because there are so many things to explore in today's world. Technology is changing very fast. And what is new today, tomorrow it gets outdated, obsolete, new things are coming. So always you have to keep up to date, and that's why you will keep moving upward. Like, I mean, you get accustomed to new things, new architecture getting created. 10 years down the back when the internet was there, nobody think of a big billion day sale like that.
I remember that.
So we cannot even imagine that day. Now we are doing big billion day sales. We are able to scale up that level. Yeah. Again, another 10 years down the line, I don't know what is going to come, but we are going through the ride.
It's funny.
So as a techie, you have to always be, up to date. And if you love it, just go through it, enjoy it.
It's funny how you mentioned Big Billion Day. You're right, we've evolved and we have to keep evolving. I went from Sabse Sasta Din, if you remember the old Big Bazaar time.
Big Bazaar
time. To the Big $1 billion day or whatever, sale or whatever. But it's interesting that you're passionate with technology and you're always ready to learn new things there.
Yeah.
And that's what keeps you busy.
Right.
What about family? You're a family person?
Yes.
Do they inspire you?
Yeah, of course. I love to spend time with them. I mean, nowadays it's getting hard to actually, adjust both sides. But yeah, of course, at the end of the day, they keep inspiring me to go beyond and keep moving.
That's amazing. One tip, because you mentioned family, How do you manage family and business together? Quickly.
It's difficult, definitely. I would say. But yeah, I mean, you have to have, because see, I mean, at the end of the day, we are all not machines, right? We are humans. You need to take rest, you need to spend time with your family just to get more energy for the next day. That's the way I take it.
So just keep it simple.
Yeah, keep it simple. I mean, I keep it like that. Well, I mean, just follow natural courses. That's it.
Well said. And Abhijit, I want to end with you. Your inspirations. It can be books, like I said, movies, art, pieces of art, whatever. What keeps you? I know you went from being a civil engineer to a software engineer to building products. So I want you to tell me what inspired you in life.
See, I think doing something innovative out of the track, has been something which I've always tried. Right? Whether I've been able to do that or not is a different thing. But it has always been there to do something different, thoda hatke. Okay. And I think I read plenty of books, and literally, I mean, I gorge on books, right? So a lot of inspiration in my life has been drawn from autobiographies, right? And things which are at scale, like how does the economic system pan out? How was it 100 years back? How is it now? There are a lot of materials written on those, and they fascinate me a lot, right? So, I mean...
any biography you'd recommend quickly?
Yeah, I mean, there are plenty, actually, which are very good in quality. The latest one which I read was The Shoe Dog by Phil Knight.
Yeah,
right?
very good.
Very easy to read, very inspiring, and it shows a real picture. It doesn't glamorize, right? It's not a glorified version of an entrepreneur. It actually shows the downs more than the ups, right? So I think that's a good book to read for any aspiring entrepreneur.
No, so thank you, gentlemen, for being on my podcast. And for those of you watching this, check out GoldenPi. You have to check out the bond market because that defines global markets, actually. It's not just equities. So if you're a fan of crypto, you're a fan of equity, you can't say no to bonds. And do check out GoldenPi. What's the website? Who wants to have the final word? What's the website called?
It's called www.goldenpi.com. That's where you visit and you're able to invest.
And what does GoldenPi mean?
That's I think it was $1 million question. Now it has become $1 billion question. So, we had a lot of heated discussions around what the name should be. Pi was always there. Pi capital, Pi this, Pi that, lot of versions.
There's a lot of pies out there.
And we first found a lot of those names have already been taken up when we were exploring, right? But then eventually what happened was, this golden thing, gold, thing came in from safety perspective. We Indians consider gold as auspicious, safe, and we like to invest in them, right? And this Greek letter pi, right, it stood for multiplication, right? And when we combined that, we felt that this was something impactful, right? Invest in something which is very stable and at the same time it grows. So that's how, we landed on that GoldenPi word after a lot of debate. That's what it is.
There's so much more to talk about. I can talk about gilt-edged securities as well now. But I would suggest that get a part of your pie onto GoldenPi. Check them out. Thank you, gentlemen. Thank you so much.
Thanks, Vishal.
Thank you.